Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we look back on last week, it was a significant week. It was very strong. It was relentless as we had 4 out of 5 days were positive. The big leader last week was the Russell, up 6.4%. I've been telling you for a number of months now that we're going to see a positive rotation in the small and mid caps if this rally is going to continue on a longer term basis. We saw Russell up 6.4, S&P up 3.8, and the NASDAQ up 4.6. There was also strength across a number of sectors. Materials up 5.4, energy up 5%, even utilities was up 5% in spite of the treasuries moving up to the highest levels they've been for a while. As we look forward to this week, it's going to be about earnings and a significant amount of further fundamental information that's going to be coming to the market is definitely going to continue to affect sentiment. Now, I've talked to you for probably the last 3 weeks that I didn't believe that market participants would put on a big bet ahead of the election. That may not be what's happening here. We're starting to see a lot of elements come into the markets that are starting to push the markets much higher. Now, as you'll see when I go through our database tonight, we're seeing a continuing rotation into our intermediate and the short-term models, telling us there's something bigger going on. I've been discussing that with you for a number of weeks. As we've seen in 2020, all the expectations in the markets have exceeded or went to the extreme of their expectations all the way up as we went through step by step on the upside. This is going to continue as we begin earnings season, and we're going to see the banks and the financial institutions that primarily in focus this week as we go forward. The big banks are going to start reporting on Tuesday, and it's just going to grow from there throughout the week. All the way into Friday, there's some significant reports coming out. On Tuesday, we'll see the CPI come out, and on Wednesday, the PPI. Both of these reports are expected to show a 0.2 increase, which is not that big a deal. I don't see that it's going to be material, but if it came in higher than that, that would represent a win for the Fed, that maybe they are getting inflation to kick in a little bit. I don't think it's going to be material for the most part. But once again, everybody's going to be focused on those claims and the continuing claims. Claims are expected to show an 825 new claims again this week. Last week we saw the continuing claims come in at 10.97, which was below that 11 million number that I talked about. This week, if we come in below 10.5 million, that's just going to indicate that more of the economy is coming online. I know there's a lot of disruptions yet out there, and that the economy is not screaming by any fact, but everybody is becoming more and more optimistic as we go forward by the day. At some stage, California and New York and all these states will come back online. Many folks have said the day after the election, they'll turn the whole place back on again. It won't matter. I'm not convinced that that is the case, but no doubt that we will see the economy come back online, and we're going to see further traction in the economy. Now, we're a long ways from recovering, and I've talked a lot about that over the past several weeks. There are so many things that are broken, but there's also a lot of new hotspots that are emerging. And as we go forward in the next 3 months, we're going to have a lot to talk about. It's going to get really exciting as we come into the election. One last mention, we're going to see retail sales, industrial production come out, and capacity utilization. That's going to tell us a little bit more about market sentiment. But the point is, these are the things that affect market sentiment and cash flow into the market. And my job is to figure out the cash flow into the market. And we're definitely seeing that process continue. Let's go ahead and take a look at the charts and see what they're telling us for this week. As we begin the review of the WaveTech database, beginning with the short-term models, you'll notice that we did get about 600 new buys, only about 75 new sells. So this is a bullish ratio. We've now moved the database back to 35.85% bullish. Been discussing that if we get above 42, that's going to suggest that a short-term rally is going to be sustainable, and will also suggest, and I'll go through here in a minute in the technicals, that the market rally is likely to extend above some of the Fibonacci numbers that I mentioned last week. As we break it down further, you'll notice that we now have 5 of the 12 sectors long as well. We now have capital goods, conglomerates, consumer non-cyclical, transportation, and utilities. All of these went long last week, so we're also seeing the sectors starting to flow in along with the individual symbols. Now the big story this week is on the weekly models, and weekly has now moved back from 60% bullish back to 65.33%. As we look at the all stats page, you'll see that the weeklies got 1,800 new buys and about 550 sells. So we're net bullish on the 3.2 and neutral on 1.2. But this is another positive event that's happening. We're continuing to see a lot of rotation on the intermediate models. And as I've been discussing for a while, the expectation for the past 6 weeks has been for this giant sideways pattern to unfold. We saw the extremes down around 3,200 and we saw the high at 3,580. We're going to continue to stay locked in this range, but the database is confirming that's what's going on, especially on a longer term basis. If we look over on the right here, you'll see that the current duration fulfilled is only 25%. Now the average holding is 200 days. So we still have a lot of forward-looking returns on the intermediate, which, as I've discussed in the past, will carry us well into Q1 into Q2 of 21-21. So this is going to be an ongoing pattern that's set up. There's still a lot of bullishness, and there will be new highs on the S&P, all of the indexes, as we go down the road. As we begin looking at the S&P futures, now we have traded up to an R1 value, 34.86. The high so far has been 34.87, so we've hit R1 already. S1 number is 34.60. We had a low of 64. So basically we're working an S1 R1 number. An R2 number will put us above the 0.76 retracement on the futures. That is at 34.86. We basically have done a 0.76 retracement on the futures. The cash has a little bit different configuration, which I'll go through here in a minute. But we're not seeing huge acceleration, but we are seeing all the PPMs remaining quite bullish all the way down the spectrum, PPM 1, 2, 3, and the PPM 200. Going to the cash, as I just suggested, the 0.76 retracement number on the cash is 3496.1. And if you look at the market grid over here, R3 for today is 3498.81. So that would represent a move to that extreme. What we're going to be looking for when we get there is some sort of reversal, and this also will complete the 13th day of this pattern, going all the way back to this low on 9/24. So this is likely from a cyclical viewpoint to be a minor top, and we'll pull back, but the pullback now looks like 34.40 is going to be about as far as we're going to go. So it'd be a minor rotation right now till we see some more of the markets. It's difficult to call it at this point. We should stall here. If we can print and close above 3,500, we'll have to go to the weekly grid to see what the possibilities are. The weekly grid on the cash, R1 is 3501. It's very similar to R3 today at the 3498. So there's target on this extreme at 3498 to 3501. Above that number, we're right into 3530, 3557, and you see the RXT for this week is a retest of the highs basically at the 3580 level. Is on Friday we did get an RXT close. So this sets this pattern up perfect of what I've been talking about over the past several weeks. This upward ABC. I didn't think we would get to the 0.76. We're going to be at 0.76 possibly today or on Tuesday, and we're going to have to watch for a reversal off this level and see if we can trade back into the range. Now, the RXT close on Friday, we closed at 34.77. RXT was 34.56. This is a weekly chart on the cash. So that suggests we could see 1 to 2 weeks of sideways to down, and typically if we look at the grid, we would go back in toward the lower end of the range of the market grid on a weekly, which would suggest 34.24. The low would be 34.96. There is S1 at 34.52. That's going to be substantial support. If we can't close above 3,500, then look for this retracement back toward this 34.52, 34.24 level over the next several days. If we can't figure out that this thing is going to top out and go back into this ABC pattern, that will be the significant pattern to pick up on. Going back to the daily for a minute, let's revisit the pattern that I've been discussing over the past several weeks. We experienced an ABC pattern down. Now what we're doing is an ABC up. I still believe this is the case. This is the extreme at 34.99, which will be the 0.76 number. These numbers can print slightly above. As I mentioned, we have an R1 on a weekly basis is at 35.01. The next number is 35.25. It could spike up to that level, but this is where the market should top out. The next pattern should be some sort of ABC down. It's just a matter of how deep the correction is. And I've been discussing this for a number of weeks. I believe we're going to stay in the confines of this Fibonacci between 34.99 and the low down at 32.95. In fact, the 50% number is 33.97. That's the number I just discussed with you on the weekly chart, being a significant support at that level. So I'm still expecting that this pattern is going to unfold. I still don't believe we're into a major breakout just yet. There should be, over the next couple of weeks, some still backfilling and consolidation. As we go to NASDAQ futures on the daily chart, we're looking at key resistance on this at the R2 number, 11,823. We've been to 11,792. There's still some upside on this based on that. If we see an S1 R2 number today, overnight so far we've seen 11,687 as a low, so basically a little shy of the S1 number. We're above the R1 numbers. Look for an R2 number, but I do expect to see it also top out. 0.618 is 11,773. We just penetrated that tonight. That's going to be a key number to watch for a reversal. Also, we're going to be watching that 0.76 up at the 12,036 level, and that would be beyond the RXT number for today. But looking at the market grid on a weekly basis, there's a much better match. R3 is 12,125. That would be the 0.76 retracement on the NASDAQ. R1, 11,848. That's going to be substantial amount of resistance. S1, 11,601. We've been down to 11,687. The expectations for this week are going to be for a minimum of a S1 R2 on the upside. But I will be on full reversal alert looking for any intraday reversal patterns. Next market I'll cover is the 10-year Treasuries. We did move up to the 0.77 level. Also got an RXT close on a weekly basis, which suggests we're likely to see some weakness on the Treasuries, at least for 1 to 2 weeks. That would suggest we'd fall back toward maybe an S1, S2 number, which would be back to the 6.66 level. The substantial support is at 0.68, which is the 10-week moving average, which is also up at 3.61%. So rates are definitely going to be moving higher over the next several weeks, and that also coincides with the bid in the Russell. Believe it or not, this is a sign that we're seeing money start to flow out of Treasuries. It's looking for a place to go. In the opening comments, I said we got to figure out the cash flow. Well, cash flow is starting to come out of the Treasuries. It's going to go somewhere, and it looks like it's going into the Russell. Next market I'll cover is the US dollar. The dollar is continuing to hover right around the 10-week moving average. It's at 93.23. Last is 93.06. We're slightly below that number, but expect to see this move back toward R1 93.34, maybe as high as 93.69. The extreme will be on the downside, will be S1. So the expectations for the Dow this week, S1, R2 extreme on the upside. We're seeing the PPMs remain in a positive configuration, even though they're slightly negative. This is still part of that bottoming pattern that I've been discussing for a number of weeks. The final market that I'll cover tonight is gold. I've been discussing this PPM1 is at a minus 0.49. It is down in an extreme, but that it's not an indicator that the extremes mean that we're going to flip around. It's not like a RSI or something like that. What we're really seeing here is that is telling us that the 10 period moving average at 1935 is going to be substantial resistance. We've seen a high so far overnight, 1939. It's actually trading just below the 1935 level, 1933. The low is 27 on a weekly basis. I would expect this to continue to be sandwiched between that 10-week moving average at 1934 and the 21-week moving average at 1882. Now, the 21 is rising strong enough that it's going to support the markets like what we saw last week, but I think this pattern will continue. As we look at the daily chart, you'll see we've got a 3-day pattern up. We're right at the 40 period moving average. It's very similar to the 10-week moving average. 40's at 1935. It's really about the 10-week moving average on the chart we just looked at. We're also looking at the Fibonacci grid here on this chart, is that 1942 is a 0.382 retracement. So look for us to move back toward 1906 and ultimately toward that 21-week moving average I just mentioned at the 1880 level. This will complete the video tonight. Thanks for watching. We'll talk to you tomorrow night.